Hi everyone, I'm Jason with Level Up Investing, and in this video I'm going to talk about Nvidia. So I've known about Nvidia for quite some time. I grew up playing video games, playing the games on the home console, and Nvidia has been known to have the to be the engine behind a lot of the graphics in a lot of these games. But the more I learned about Nvidia over the past couple years, the more I've learned how really far-reaching their technology goes. And I wanted to go over some of that here in this video. So a lot of stocks that I go into are very much value stocks, value investing, kind of like Warren Buffett does and Berkshire Hathaway. But some of the stocks that I do are going to be more like this stock. Stocks that really have significant competitive advantage. They may not be priced at a value at this time, but significant competitive advantage for the future. So let's go over that example here in Nvidia. So this is from their website, which really it's a nice depiction of the platforms that they have technology in. A lot of their computing technology, as I mentioned on the right here, gaming, entertainment, graphics. They have that platform based on what's called the GeForce gaming platform, and the last documents that I saw state that there's about 200 million gamers out there that are utilizing some form of Nvidia technology. So that's a huge part of their revenues right now. But you can see some of the other things that are really going to be driving the future, like autonomous machines, and along with that, autonomous vehicles, self-driving cars. So I'm very much interested in this topic, and I'm going to do a lot of videos on this because I think that's really the future. That's a lot of it. So that's why I'm interested in Nvidia, because they are involved in the artificial intelligence and a lot of the game learning that's involved, a lot of the computing in order to make this technology possible. So it's going to be a fundamental that Nvidia is going to be involved in a lot of companies. In fact, I read that they have over 370 autonomous vehicle partners, car companies that are now using the Nvidia Drive technology, they call it. So that's very significant. Self-driving, autonomous machines, and design and pro visualizations. So a lot of the virtual reality, the augmented reality, they do a lot of that, along with the deep learning and the artificial intelligence. But one other thing that a lot of people I think overlook or don't really know about is the fact that Nvidia is heavily involved in cloud and data center computing. So recently, not too long ago, Nvidia acquired a company called Mellanox that is an expert in the networking. So you take Nvidia's computing expertise, you put that together with the networking expertise, and that's where a lot of the data centers come. So a lot of companies are utilizing these data centers, companies that you probably use like I do, like Amazon and Walmart. So you can really see that along with the high performance computing. So you see a lot of these kind of mix, but they all have very much the advanced computing technology as their main drive for all their platforms, healthcare, and more recently, Nvidia has been involved a lot with the computing for remote work, especially in the current economy and the working at home. So they've really diversified in a lot of fields that are going to be key in the future, I think. And this is from the Nvidia newsroom. This is what I mentioned earlier regarding Nvidia completes acquisition of Mellanox, creating major force driving next-gen data centers. So you have the computing of Nvidia along with the networking technology of Mellanox, making for a very strong partnership. And I've listened to some of the interviews with Jensen Huang, and here's a picture of him shaking hands, and it says down here, Nvidia today announced the completion of its acquisition of Mellanox Technologies Limited for a transaction value of $7 billion. And what he noted in that interview was that this isn't just a let's acquire the company. No, they've been working with the company for many, many years on many platforms, and this was just a natural next step. So the chances of success with these two companies coming together is very, very high. So that's the kind of thing that I like to listen in on when I listen to interviews, to try to get those pieces of information that I may not get out of a 10K or a 10Q, but something very important nonetheless, especially when you're looking to invest in something like this. And then this is the really big news that's more recent. Nvidia and Mercedes-Benz appear to be reinventing automotive business model. So what's really important here is that you can see the picture here. It's basically what they're creating is a computer on wheels, what they want to do. And in the next couple of years, that the next generation of vehicles that Mercedes-Benz is going to produce is going to be powered by Nvidia when it comes to the autonomous vehicles. So what's really key on a business side for Nvidia is that the software that they are creating, the computing that they're creating, is going to be upgradable, and therefore there's going to be many opportunities for revenue generation and profits over many years. So that is the real significance of this connection. As I mentioned earlier, the Nvidia has I think something like 370 partners in the autonomous vehicle space, partners that make the vehicles. But this is probably the most high-profile partnership, and it's made quite a bit of a headline here. So that's really important to think about. It also brings to light the importance of the leadership. How, as I mentioned, the CEO of the company, he's a true visionary, and you can see how much of a visionary he is when it comes to these partnerships and these platforms that they are creating. So I think this is really a good company to invest in for the future. Okay, so let's look at some of the financials with Nvidia. So I'm looking under Guru Focus on this one. And the first thing I like to look at is the top line. And you can see here under revenue, these are the annual numbers from January of 2017, 2018, 2019, and 2020, and then the trailing 12 months. So just looking at the revenue, you can see the revenue numbers increasing, and over the last 12 months, revenues of almost $12 billion for the company. Next thing I like to look at is the actual net income. So I scroll down here, and I can see the net income with a steady increase alongside with the revenue. So those are the first two things I look at, is revenue and net income, gradual increase over time. Next, I look at the earnings per share, and I can see the nice thing about Guru Focus here, it gives me the annual and the quarterly numbers right next to each other. So earnings per share over the course of time, again, a steady increase from 2017 with $5.42 dollars per share of earnings in the trailing 12 months, and looking at the most recent quarter, 1.49, which is also an increase from last year. So increase in revenue, increase in net income, increase in earnings per share. Now moving on to the balance sheet, I like to look at the level of the amount of leverage the company has. I look at the debt to asset ratio. Actually, it's under the section under ratios here. So debt to asset ratio, I can see that the debt to asset ratio is quite low, slightly increased over the trailing 12 months, but nonetheless, it shows that the company is not over leveraged. So you have it's the debt compared to the total debt compared to the total assets. So it's not over leveraged. The next thing I like to look at is the level of liquidity of the company. And so for me, one way to find it is under FinViz, and I can look at the current ratio, which is the current assets over the current liabilities. And when a company is doing well, usually if it's a 2-to-1 ratio, their assets are 2 to every $2 of asset to every $1 of liability. Well, the current ratio here is quite good. It's over 10. So that's a good indication of the current of the company's liquidity. Going back to Guru Focus, I also like to look at the efficiency of the company, or what their net income is compared to their total assets. Basically, how efficient is the company utilizing their assets? So I can find that under the return on assets. And what I'm seeing here is that I'm looking for generally what would be a good range would be in the 20 to 30 range. If the return on assets is lower than that, then the company has too many assets for the income it's getting, meaning it's not very efficient with its assets. Whereas here you can see that the numbers are hovering 19 to 33, so they're right in line with good efficiency for their return on assets. Next, I'd like to go down to the cash flow. So here it is, cash flow statement. Cash flow from operations. If there is an upward increase in the positive cash flow, because if you've seen some of my other videos, you'll see that I look at the cash flow much more than I do look at things like net income, because the cash flow is, I think cash flow is the purest of the financial statements, and it just tells you cash in and cash out. Whereas the income statement, and to some extent the balance sheet, those can be misleading sometimes because of the way the accounting is done, depending on the which year a certain item is placed in. There's a lot of different things that can happen there, whereas a cash flow is generally much more straightforward. So cash flow here, you can see, has got a nice steady increase, a positive cash flow of almost $5 billion in the trailing 12 months. So that is quite good. Now looking at the dividends, looking at here under Guru Focus, current dividend yield for Nvidia is 0.15% with a dividend payout ratio of 0.12. So that is telling me, and again, the dividend payout ratio is the amount of dividend compared to the ratio is the dividend over the profits of the company. And normally, if a company has dividends, you worry that the dividends are too much. You want to make sure they're not over, say, 30-40%, because then you start to wonder if the company is retaining enough earnings to reinvest in the company. Well, that's definitely not a problem here. The dividend yield for Nvidia is not much, as you can see here. So a lot of my other companies I invest in, dividend-wise, I'm looking for at least a 4% dividend yield, 4 to 5% at least. And so this is not in that category. Like I mentioned earlier, this is not what I would consider really a value stock, especially with the current stock price. But it is more of a future growth stock to me. So nonetheless, I still like to look at the dividend yield. Okay, so now, like every stock I look at, I like to look at the what I would consider to be my version of the intrinsic value of the company. So for Nvidia, I took the cash flow from operations. I took cash flow from the trailing 12 months. And when I looked at multiple sources, looked at growth rate based on earnings growth rates, I saw consistently in the 14 to 15% range. I took the most conservative number, which was 14.91 for the next 5 years. But for the following years, 5 years after that, I decided to go a little bit more conservative with those following 5 years, thinking that 15% is excellent, and I think there's a lot of great potential with this company. But just to be conservative, I dropped it to 10% over the following 5 years. With a discount rate of 8.5% based on the beta that I found. And I put in the shares and the cash and short-term investments. I put that in there, and I pulled that from a couple different websites, including Morningstar, as well as the current portion of the long-term debt as well as short-term debt, which is very low compared to the company's assets. So when I plug that into the formula and I get the projected cash flow over the next 10 years with the current discount rate, it gave me the present value of cash flow, which over the course of 10 years came out to the sum of about $64 billion. And when I put that into the calculation based on the shares outstanding, it gave me an initial intrinsic value per share of $103.85. When I take into account the cash the company has, it increased the intrinsic value up to $130.44. The debt change was negligible, so my final intrinsic value per share of Nvidia currently is $130.27. If I were to try to buy it at a margin of safety, that's $65.14. I think that's pretty much that. I just don't think that's going to happen unless we have a major market crash. But I think that's a real long shot. So currently, at the current stock price of $419.17 as of today, the stock, based on my calculation and my evaluation of the growth rates and the discount rate, my evaluation is that it is currently selling at a premium of 222% compared to the intrinsic value. Just a caveat, again, this is just my calculation. These are based on the numbers I researched and extrapolating some of the numbers and adjusting the numbers as I see most appropriate. And you certainly want to do your own valuation. I'd be interested to see what you think. If you go ahead and do your own calculation, what your valuation is of the company, I'd be very interested to see what you have. So definitely put that in the comment below. But this is where I'm at right now, that the stock is very much overvalued. But you might ask yourself, okay, well, obviously this guy didn't buy it today because it's overvalued. Well, let me get to that in just a second. So again, this company is not in my value investing portfolio. It is definitely in my, what I would consider my exciting future growth type of company. It's going to be in that portfolio for sure. So looking back at these platforms, I like to really think about the reach of this technology and what it's going to do for a lot of things. How we're gonna interact with our environment in the future. How we're gonna get to work. How we're gonna go on vacations. How we're gonna be entertained. How companies like Amazon and Walmart, how are they going to increase and improve their logistics, utilizing data centers. How are companies involved in healthcare going to be utilizing this technology, using artificial intelligence and deep learning? Basically, what I'm saying here is that the amount of applications of this technology and this computing power, the amount of applications is, I think it's far beyond what any of us are even considering now. So I'm definitely bullish on Nvidia. I went ahead and bought some shares today. I went ahead and bought 25 shares. And yes, knowing that it's way above the valuation that I just told you about, I think this company is really set to grow significantly. And my objective now is to go ahead and hold on to these shares. And then if there are any dips in the market over the next couple years, whether there are dips or not, if there are, I'm going to go ahead and buy more. But I'm definitely long on this company. I think it's going to have significant ramifications, especially my favorite is especially the self-driving vehicles, the autonomous vehicles. I think that's going to be a very big part of our future. And so I think NVIDIA is going to be right in the middle of it, and they're well positioned to do very well in this market. The different platforms that you see here, the gaming, the entertainment, what NVIDIA has called the GeForce gaming platform, the drive platform for the autonomous vehicles, and for the data centers, the artificial intelligence, they call it the EGX Edge supercomputing platform. I mean, a lot of that stuff I think is just very, very very top notch and cutting edge. So that's why I'm long, and that's why I purchased some of the stock today. So I hope you like this content, and let me know what you think about Nvidia, and let me know if you have a valuation that you've come up with or your thoughts on the future of this company. If you like this content, definitely give a like to the video, subscribe, and hit the notification bell, and then I'll definitely see you on the next video. Thanks a lot.